Okay. G'day YouTube, Max Wright here, and I got a really random and fun video for you here today, I think. So I'm actually chatting with a very good buddy of mine. I went to college with him. We did an engineering degree together, and he's actually largely the reason I passed because neither of us went to class much, but he managed to have all the friends who was able to train us the day before the exams and get us to pass an engineering degree. So Dan and I go a long way back, and he's going to try his very, very best to call me by Max Wright. That's not my real name, by the way. And so Dan's been in and out of crypto for several years. I mean, just being around me, that's kind of a thing. But he recently he got like the DeFi bug, and he's just spent like I don't know, days, weeks researching DeFi. And we were just going to shoot the shit like old buddies do. And I thought, you know, what the hell, let's hit record and let YouTube watch this conversation. So that's pretty much it. So good to see you, buddy.
Hey, thanks, Max. And I didn't actually know it was public information that your name wasn't Max. So there you go.
Yeah. No, it's not a big conspiracy thing. I sold a company, you know this. I sold a company and I wasn't able to use my real name for like 5 years. I can use my real name now, but now Max Wright is everywhere, so it's just easier to stick with it. So yeah, not trying to trick anybody. It just is what it is. So okay, let's talk about it. You've done, I think you're a little bit inspired, correct me if I'm wrong, but by my Thorchain series. If you haven't watched my Thorchain series, I did a 4-part video series on Thorchain. If you go to the channel, so click on my icon just below this video, go to my channel, and there's 3 playlists. The third playlist says Thorchain. I think it's the most significant development in all of crypto land for many, many years. Dan watched that, got a little bit inspired, got excited by Thorchain. Then he went and did a whole bunch of research on DeFi, kind of got bored with Thorchain, thought there was something cool, and then kind of maybe a little bit halfway came back to Thorchain. So it's kind of interesting. That's his journey that I've got gathered so far. And we're just going to shoot the shit a little bit. So go at it. What have you researched? What have you discovered? I've been off at the Miami Bitcoin conference the last week, and you've been researching DeFi. So go for it.
Yeah, that's exactly how it happened. Actually, I did. I watched your video on Thorchain, which I thought was excellent. You spoke to some really cool experts. Apologize. I've got a really bad cold, so my voice is a bit croaky, and every now and then I might need to mute and go and cough. But so yeah, I got really excited about this Thorchain thing where oh wow, you can actually, you know, I'm holding all this Bitcoin and I've got a lot of money's worth and I'm not earning anything on it. And with Thorchain, I can put my Bitcoin in, I can earn on my Bitcoin, and that's what got me excited. And so I went down a rabbit hole, as you do on the internet, right? You learn about one thing and that leads you to the next thing, that leads you to the next thing, and on you go. And then I learned about DeFi, right? Like I really didn't know I'd heard the term, I didn't really know anything about it. So I went down that DeFi path, and then I realized, oh, all this stuff that Thorchain can do, all these other things can do anyway, except, you know, you can't do native, you can't swap with native Bitcoin. I know I'm sort of assuming a lot of knowledge from the Thorchain stuff here, but go watch the Thorchain video if you haven't seen it, right?
Yeah, no, that's a good point. I'll put this on the Thorchain playlist too, because I suspect we're going to be talking about it a lot and all the things around it. So that's okay.
So this idea of being able to invest your Bitcoin, earn some money, you can actually, there's other DeFi protocols out there where you can already do that, but it's with wrapped Bitcoin, not with native Bitcoin. And I'm like, that's close enough. Wrapped Bitcoin, it still gives me exposure to the Bitcoin price movements as an investor. So if I want to be exposed to Bitcoin, I can still do that. I can still earn income. So at that stage, I was like, now in that case, what does Thorchain do that the others don't do? And then I went further down the rabbit hole, and a lot of the DeFi projects at the moment, most of them, you would dare say, are built on the Ethereum ecosystem. But there's other emerging ecosystems coming out there, like Polkadot, the Binance, Cardano is coming out with smart contracts soon. And with these other ecosystems, that's going to make something like a Thorchain a lot more valuable, where you can switch between all sorts of ecosystems, if that makes sense. So that's where I came back to Thorchain. So I guess in my research, probably the easiest way to sum it up, I've drawn an analogy to a smart device, right? Like your phone. And here's where I've ended up. I guess something like Ethereum, so you got different categories, right? The first category is an ecosystem. something that runs a smart contract. So Ethereum is an ecosystem, right? And so Ethereum, as far as your phone, is Android or iOS, right? And then, like I said, you got Polkadot, you got Binance Smart Chain, Solana. You got a whole bunch of these other ecosystems which are Android, iOS. Well, used to be Microsoft, not anymore. There's basically only two now, right? In phones, there's only two, but in cryptos, there's multiple. So I guess what I'm looking at here is the categories of crypto. So one is that ecosystem as a category. The next category is in crypto, they're called dApps, right? But it's the same as an app on your phone in this metaphor. So your apps would be something like Aave or MDEX or Uniswap, right? So they run on a platform. So Uniswap runs on the Ethereum network. So Ethereum is the operating system. That's your Android. And then Uniswap is an app within that operating system. That'll make sense?
Yep.
So they're two of the categories. And I'm just going to mute and cough for a second.
That looks nasty.
You couldn't hear that, could you?
No, I couldn't.
Yeah, good. So they're two of the categories. And then an additional category you've got is an Oracle. And I guess the equivalent on your phone for the Oracle would be, so the Oracles are, there's only one that I know is Chainlink. There's others out there, but Chainlink's by far and away the biggest. And it would be the equivalent to AT&T, right? Like your mobile carrier, where you're trying to get the. So the reason it's the equivalent is you can still use your phone without it, but it's nowhere near as cool, right?
Okay.
Like if you're not connected to the internet, it's not as cool. Whereas, so an Oracle, for those that don't know, let's take something like Uniswap or any of these swap companies. They say we'll give you 5% interest. Like if you commit your Ethereum, we'll give you 5% on your Ethereum, probably a lot lower for Ethereum. Plus, we'll give you 2% worth of Uniswap tokens, for example. For them to be able to do that, they need to know what Uniswap is worth, right? Because how can they work out what 2% is? They do that with an Oracle. That's where Chainlink comes in, right? So pretty much every DeFi product, every DeFi app out there right now uses Oracle, uses Chainlink as the Oracle.
So let me just cut you off there. I just want to make sure your understanding is accurate.
Yeah, it could not be possibly.
yeah. So that when Oracles first came out, that was kind of always the thought that it was going to be. So Oracles provide real world data because blockchains only know what's happening in the blockchain. And so an easy example is like, let's bet on the presidential race. We don't want to do a smart contract. If like Trump wins, money goes to me. If Biden wins, money goes to you. We put money in a smart contract and the smart contract pays us depending on the result. The contract will check the Oracle like Chainlink, and Chainlink will say what happened in the real world and it will tell. All right. Now, in addition, the original vision for the Oracles was it would also give price information, like what's the price of Ethereum in US dollars? Well, the blockchain of Ethereum doesn't know that. It needs an Oracle to do that. However, something has happened and there's been a bit of a change there. So now with the peer-to-pool mechanism that Thorchain uses and Uniswap now uses, it actually, the chains now actually, or Uniswap now actually has a price mechanism for Ethereum priced in like Tether or priced in USDC based on the pool mechanism and not via the Oracle mechanism. And just recently, I mean, within the week, Vitalik Buterin came out and said, we should use, the Ethereum chain should use Uniswap data to provide price data in the ecosystem and use Uniswap as the Oracle and not use Chainlink at all for price data. Now, that will never be the case for the Trump v. Biden win or the Super Bowl victor. But with regards to price data, it's actually, they don't use oracles anymore, the new modern version of it. Just, I didn't know if you knew that and I wanted to clarify. I
didn't know that. That's good to know. That's handy to know. That being said, that'll work for swap DeFis. What about something like Aave, a lending platform, for example? So Aave gives out the Aave token. So you can come into Aave, you can lend Ethereum, and they'll say, okay, we'll give you 2% on your Ethereum, and we'll give you a certain percentage of Aave as well. Where does it get that information? It wouldn't be able to get it in the same way, right?
And that's what Vitalik Buterin is suggesting, is it should use Uniswap as the oracle in that instance.
Right.
But Aave would still need to use an oracle. It would need you would want to use the largest pool, the deepest pools, and the biggest decks to provide that data.
So either way, it still needs an oracle, right?
Yeah.
So, and without an oracle, it cannot run, and that's hence my So without an oracle, you can't have an Aave. An oracle, whether it be Uniswap or Chainlink, it needs an oracle.
Yeah, if for that mechanism that you described, yeah, I think so.
Yeah. So I still think it's a valid metaphor that the oracle is AT&T. So you can still have a phone, you can still have crypto. You just can't have a lot of these cool apps can't do cool things.
That's fair.
It works for the metaphor. That being said, I didn't know that they were talking about using and that will affect my investing actually. So that's interesting. It's good to know that they were thinking about using Uniswap as an oracle. I guess the only thing about that is that Uniswap, Uniswap, I believe, and I might be wrong here, only has Ethereum tokens, right? Correct. Well, not just Ethereum, like Ethereum based tokens. So you won't have any Cardano on there. You won't have any DOT on there.
Correct.
Any native Bitcoin, anything like that. So, I mean,
you could use the wrapped Bitcoin price as the Bitcoin price.
Yes, but you'd need a wrapped of everything, right? So on Polkadot, there's, I don't know, 100 apps on Polkadot. Each of them have their own token. So you then have to wrap each of those 100 different things. So it's not as comprehensive as a chainlink.
Correct.
Cool. Just going to have another cough. Sorry. I'm obviously I'm in Australia. It's winter here and I've got a cold, but I don't get colds very often. So I guess here's where to me it gets interesting. So using the phone analogy, you've got your ecosystem, that's your Android, your iOS. You got your apps, which are your apps, right? They're your Uniswaps or your WhatsApps, right? And then you've got your oracles are your AT&Ts. So what's Bitcoin then? And I've got a bit of a controversial idea of what Bitcoin is in that, and this is where I guess the conversation gets interesting, and I'd love to see your take. What would you say Bitcoin is in that analogy?
In that analogy?
It's a tricky one, right?
So it is a tricky one in the context of that analogy. Because, well, yeah, I mean, the way you've set that up, I don't think the phone networks need anything to work. So therefore, Bitcoin is nothing in that analogy.
So yeah,
Bitcoin with an off the cuff. I mean, literally, I've had 10 seconds to think about that, but no, I couldn't come up with anything because it's not needed.
Yeah, and that I guess is the thing that I've come to. Like, it's either nothing or it's US dollars. It's useless. And that's the thing. So just for disclosure, right now, my portfolio consists, well, up until a couple of days ago, my portfolio was 100% Bitcoin. I had a little bit of Ether as well, actually. And I just started to think about diversifying my portfolio. And the more I thought about it, the more I'm like, Bitcoin, I've been the one that argued against people forever, right? People like, Bitcoin's not worth anything. It's not, you've heard this argument 1,000 times. And I was always on the other side going, yeah, but your dollars aren't worth anything either. Like, everything's worth what people are willing to pay for it, right? And I was always on that side, but now I'm a bit more, dollars are definitely not worth anything, right? US dollars, Australian dollars, they're not worth anything. But Ethereum, just for example, is worth something because it's the token used on this ecosystem. Like, it's actually has use and has value. So as far as a portfolio, what I'm thinking at the moment, I haven't done it yet, is pushing my Bitcoin holdings right down to like a 20% and investing in some of these things that are quote unquote worth something. So getting heavily into Ethereum And so that's the first step, is Bitcoin versus not Bitcoin. And then the next step is, okay, if you're not going to be Bitcoin, where are you going to be? Because you can go into Ethereum. Ethereum's obviously got a lot of problems at the moment. Is something going to overtake it? If it is, what's it going to be? So first of all, let's tackle these one at a time. Bitcoin versus not being in Bitcoin. What are your thoughts on, hey, it's useless compared to something like an Ethereum?
Sure, it's a great question, and it's certainly one that's on a lot of people's minds right now, because everyone's belief gets shaken, and you go, we're kind of, maybe we're at the end of altcoin season, maybe we're not, but you see this massive run up in all the alts, and Bitcoin's getting left behind, and you're like, what's everyone seeing that I'm not seeing? And it certainly starts to ask questions and just starts to run around in circles in people's minds who have big Bitcoin holdings, and you just start, hang on, everyone's figured out that Bitcoin's worthless, and that's the mind trick going on. But I've had two, maybe three people. I'm going to give you a collation of like three people's ideas here. So I think so. Michael Saylor, I think, does a really good job of tackling this one, and he says it this way: they're doing two different things. And the example we just talked about with Ethereum is like, okay, I think, okay, the biggest problem in the world is the destruction of money. The destruction of monetary value by printing too much money. Literally every single central bank, every single country on the planet is doing it. And so the biggest problem we have is that money is not sound. And that is a $100 trillion problem that the world suffers from. It's the biggest problem that there is to be solved. And so just in the context of that question, what solves that problem better? Is it Bitcoin, or is it Ethereum, or some kind of altcoin? All right, so now you get into some really interesting questions. So like, which is more, I think that we've got a very educated crowd here. I won't go into why we want this, but which is more decentralized? And the answer is Bitcoin is much more decentralized. Which has a better proof system, so proof of work, proof of stake, etc. Which one is harder to crack? Which one has a longer time around? And you get to a whole bunch of questions. Which one has a leader? We have, Buddha Vitalik for Ethereum, it's a leader to attack. And with Bitcoin, we don't. There is no leader to attack. Satoshi's anonymous, gone, and it just disappeared. He's gone. There's no one to attack. You go to the next level, and which one is more experimental? Which one is having a new idea every week? Let's use Chainlink as an oracle. Well, different week. Oh, let's use this as an oracle. Let's change the protocol. Let's change the protocol. And it's like, if you have the base layer of the entire financial planetary network at stake, it's like a jumbo jet flying through the air. And you're like, every time you change the code, I don't care if you change one character in that code, you do an update, you're doing mechanics on a jumbo jet flying. And if it's just, it cannot be stuff, it cannot be effed up. You cannot make that mistake when the whole world's using it. And that's just not what Ethereum is trying to be. Ethereum is trying to be something really, really cool. I'm not a Bitcoin maximalist. I love what's happening in the altcoin space, and I love what's happening out there in that space. And all of that interesting stuff has given us ThorChain and everything else, which brings it back to Bitcoin. But I think where things divide is you get this concept of, I think what will ultimately be the winning solution, and I'm just guessing, that layer one money has to be this super simple, tried and tested, very slow moving, very slow updating, years and years of review before every change to the code, before you do anything to it, because it's the super, super safest. And in terms of decentralization, in terms of proof of work being much, much harder to attack than proof of stake, in terms of we don't change the code every other week like we do with Ethereum and other chains, in terms of it being more decentralized, in terms of there being no leader to attack, in terms of all of these things, Bitcoin is better positioned to be layer one money. And then from that, we can build things on top. And then you can do ThorChain and all the ThorChain competitors and everything else. And then you can start to do DeFi with Bitcoin. And I think you start to build in that way. Now, alternatively, you can do this, like the advantages of the strategy Ethereum has done is that it's rapidly innovating, it can move faster, it's got a lot of pros and cons. It's got a leader, which means you can make an executive decision and say, wind back 5 blocks and redo that transaction. It's dangerous. To me, it's dangerous, But there's an argument to be said that it's better. So I'm not saying like the jury's out, but ultimately, I think what we will find is that Bitcoin solves the layer one solution better and in a more stable way. And Ethereum's bringing a lot of innovation, a lot of cool stuff, and ultimately that will be copied and emulated and be layer two for Bitcoin, basically like what we've seen with Thorchain. And it will continue to grow out from the epicenter of Bitcoin. And there was one other point I wanted to add. I skipped past it. I wanted to come back to it. Where did it go? No,
so I forgot. I'll chime in
go back to you, and I'll try and get it back.
So I guess the problem is, I said I got two ways I want to take this conversation. Let's start with this way, and that caused the problem. So I said, Bitcoin versus others, and then I'm like, if you go to others, where do you go? Everything you said was only really relevant for Bitcoin versus Ethereum, right? So for example, Cardano is much more decentralized than Bitcoin. So, one of your major arguments there was Bitcoin's much more decentralized, and that's something that's important. Well, Cardano is more decentralized again. So why don't we move it? Why isn't Cardano the new thing? Now, as far as proof of work being harder to crack than proof of stake, that depends on how distributed the funds are. Again, Cardano, I'm pretty sure if you have a look, that the funds are really, really well distributed, which makes proof of stake very, very difficult to crack, right? Like very, very safe. Someone would, and if you're talking about this being the underlying money of the world, someone would have to own 51% of the money of the whole world in order to manipulate the system. So pretty safe, right?
Yeah, no, I'm not too sure about that. But I'm also not too sure of the reverse, and my knowledge of Cardano is not good enough to know it's more or less decentralized. So I don't have the skill set to go in and debate that with you. But the points you're raising are valid. So on that vector of decentralization, you've raised some points. I can't argue with them. But yeah, on that vector, I'll give you some ground.
And also on the slow movingness. So just from my research, and I'm not an expert by any means, by the way. Like anyone that's listening, go do your own research. And I've not been into this for a huge amount of time, but based on the research of everything I've read and everything I've watched, which is quite a lot, the way everyone talks about it is Ethereum, they say, has basically a motto like Facebook, which is move fast and break things. Like, let's get stuff out there. Whereas Cardano is the exact opposite. Every single thing they do is peer reviewed. They've been mocked for having 174 white papers and not actually getting anything out there yet. They've been wanting to get smart contracts out there. The original due date was 2017. It took them 4 years longer. So it's coming out next month. They're putting it on the test net, and then it'll be a few more months till it goes live. But this is 4 years after the original date because they wanted to build everything right from the ground up, as opposed to Ethereum that went, oh, we got Ethereum. Oh, we want smart contracts. Chuck that in. Oh, that's no good. Take that off, add that. And it's kind of Band-Aid on top of Band-Aid, whereas Cardano's built it solidly from the ground up. And that's just one example. I'm a bit bullish on Cardano, but I'm not educated enough to know all of the technologies that are out there. But I guess all I'm putting forward to you is that Bitcoin is not the only one that solves the problems that you say it solves. But so it goes, Bitcoin is not the only safe place to store your value. There's these other options, but these other options do a bunch of other stuff as well. Mm-hmm. So why would so before we go any further, I think what we really need to establish here is, what's the goal of this conversation? Are we trying to say what's best for the world if it becomes the dominant power? Or are we trying to say, as an investor, what should I invest in? Because the conversation I originally wanted to have with you before I knew it was going live or anything was, I want to make money. Where should I put my money so I make the most money? That's, as an investor,
we can stick with that.
Yeah. And like, so to give you an example, Ripple, right? Like from a philosophical point of view, I'm not a fan of Ripple. I hope it fails, but I'm still going to invest in it because I think it's going to make me money. Right.
Yep. 100%. I get it.
So in that regards, where should I put my money? And I kind of go, Bitcoin, okay, so put it this way. Is there a chance that Bitcoin gets flipped and something overtakes it? Yes. I mean, you have to admit there's a chance, right?
Absolutely.
Is there a chance that Ethereum just goes away and there's nothing? Almost no chance.
I agree.
Realistically, if you're looking from about like Bitcoin's here, Ethereum's, I'd go further down, but I'm not far away, right? Ethereum's way down here. I can only see the gap closing that way. I can't see the gap closing that way.
Okay. No, yeah, I don't share that opinion. Like I can see it getting further apart. And I'll tell you why. I remember my extra point. So in 2017, Bitcoin had an explode. Like Bitcoin had this huge problem. All of a sudden, there were fees. I think you were around in Bitcoin in 2013. We went to spend. There was no fees. You say send Bitcoin, Bitcoin goes, magically goes. There's no fees on transactions. Yeah. The Bitcoin network explodes. The blocks get filled up. Bitcoin has this crisis in 2013. There's all of a sudden there's fees. Vitalik Buterin's out there, 2017. Yeah, Bitcoin's going to fail. Ethereum's got it sorted. We don't have fee problems. That we'll never have those problems. We've got solutions. Fast forward the next cycle, Ethereum's gas fees are crippling, basically destroying its network. Yeah. And the metaphor is, and I'll come back and finish it off with what I believe is going on this time. The metaphor is that Bitcoin is the beast. It's the animal that's forging through all of these barriers that we can't even imagine that they're going to come up. And Bitcoin faced the issue of the network congestion to start with, and ended up solving it with Lightning Network. And it took 4 years for Bitcoin to solve it. And now it's basically solved, but the narrative's going to change. Most people are hodling. There's not that much appetite for it. Although now we see what's happening in El Salvador, and I think that's going to change dramatically. And there's Lightning Network ready, Johnny on the spot, ready to move 4 years after being developed. And so Bitcoin always faces the problems first. And Andreas Antonopoulos kind of brought this up brilliantly. He said in 2017, he said, I'm not sure if he said next cycle, but he said Ethereum will have this problem that Bitcoin's having with fees now. Ethereum will have it. It's just too small to anyone care about. So Vitalik should stop running his mouth. I think he said it nicer than that, but he basically said that. Now, fast forward to today, and I think what's happening right now, Bitcoin is having a problem, and I see it reading comments and speaking to people and the emails I get. I can't afford a Bitcoin. I'll never be able to afford a Bitcoin. Look someone else. So they're hung up on the price. 60,000, 50,000, 30,000. I can't afford a Bitcoin, right? Oh, here's this thing, $1,000, $500, $1,500, $2,000. Ethereum, it's the next best thing. People are saying it's cool. Oh, look, it does cool stuff. I can afford one of them. I'll jump in on Ethereum. I think Ethereum is going to go up big time. When Ethereum's $20,000, $30,000, $40,000 a coin, it's going to have that exact same problem. And I believe it's already happening. What is this shitcoin Dogecoin? What's it got going for it? It costs 7 cents. That's what it's got going for it. I can afford to own a Dogecoin. Man, if I wish I got in on Ethereum, but I missed it. I wish I got in on Bitcoin, but I missed it.
I'll get it. I can afford to own 100 Dogecoins, $1,000. Yeah. Yeah. I agree. I've been saying for years, the best thing Bitcoin can do for its price is start quoting its price in millibits.
Yep, for sure.
Like, or even whatever comes smaller than that, right? Like
microbits.
That's right. You can get 100. Well, I don't know. I haven't done the math, but you can get lots of Bitcoin for $1, lots of microbits for $1. All of a sudden, there should be a unit KS, killer Satoshis. Now we're Australian. But all that being said, that's only affecting people with less than $1,000 or less than $10,000. That's not moving the market. Right, like
no. So no, I disagree with that. No. There's retail, especially you go down the shit. Like you look at altcoin season, like institutions, they're not investing in Cardano. They're not. That is all retail. And it doesn't take much money to move the market. When you've got 70. I think Cardano you can lock up and unlock immediately.
Sorry, I'll correct that. It's not affecting the Bitcoin market. There's so much money, there's so much volume in the Bitcoin market that, 1 million people with $1,000 isn't going to affect it.
Yeah, I don't know. Maybe that, I have to do the math on that one. Maybe yes, maybe no. But Cardano, for example, you're allowed to lock it up and earn interest at Cardano, but you can, it's not locked up for, like you lock up Ethereum, I think it's locked for 2.5 years. You lock up Cardano, you can unlock it the next day and sell it. But nonetheless, you can lock it up, stake it, and earn an interest on it. I think something like 78% of Cardano is staked. So I mean,
yeah, and you know what else is cool? Once they get their smart contracts, you'll be able to stake it and also provide liquidity with it.
yeah, yeah, awesome.
So earn twice on the same money.
Yeah. So so where was I going with that thought? Yeah, oh yeah, it doesn't take like a lot of these coins are being held like the strong hands, and I just believe there's more and more strong hands entering crypto all the time. There's no doubt. I mean, especially after a big pullback like we have, like a lot of the speculators just get wiped out, get destroyed, and you're just left with strong hands. Weak hands get shaken out. You're left with strong hands. We provide a base, and the whole market goes up soon. So I don't know. We changed topics a little bit there, but on the topic of Bitcoin versus Bitcoin or something else, I don't know if I've moved you at all, but I think probably the end result of that is I'm more than on the spectrum. I'm not a Bitcoin maximalist. I'm not an Ethereum maximalist. We're both somewhere in between. But on that spectrum, I'm probably more towards Bitcoin side than you, seeing it as a better risk reward investment.
Yeah, I'm in a transition phase, right? Like I probably was a Bitcoin maximalist. Like I said, I had all my money in Bitcoin, and I'm just discovering the other side. And there's probably a little bit of, pendulum swinging and needs to come back a little bit. But when you delve into that other side, you're like, oh man, this is so cool. Like DeFi is going to change. So here's my thought, right? DeFi is the next Bitcoin, but DeFi is to Bitcoin or to DeFi is to crypto what crypto was to fiat,
yes.
Right? And we already saw what happened when crypto came. It's gone, everyone's jumped in late and it's 10x, it's 100x. I mean, I bought my first Bitcoin at $42. So, I've 1,000x my money, and I know you got in before that, right? So, and DeFi is still, it's what are we? It's like the early 2010s in Bitcoin. That's where we are in DeFi. Whereas Bitcoin's pretty established now. Yes. So I think if something's going to have an exponential run, it's much more likely to be DeFi than it is to be Bitcoin. Again, looking as an investor.
Yeah. So, but this time, see, back then you had a choice of Bitcoin or nothing. Now you have a very competitive landscape. So it's like a DeFi does that. So now you got to spread your bets. Now you got $1,000 to invest. You used to be able, okay, crypto is the tits. I put $1,000 in Bitcoin. Now you're like, okay, DeFi is going to be the tits. I got $1,000 to invest. What do? Well, you put $1,000 in Ethereum, $1,000 in Cardano, $1,000 in this, and then you might invest in some of the dApps and try and go for it, swing for the fences. It's like, well, I think Uniswap is going to be the best DEX on Ethereum, and you swing. And so you've got the problem of risk-adjusted returns. Because now you've got to find a DeFi project that you think is going to beat the majority of other DeFi projects.
No, you don't, though. You only have to find a DeFi project that's going to beat Bitcoin if you're taking your money out of Bitcoin and putting it over here.
This is true.
Right.
Yeah. So that's fair. But you got to acknowledge that some of them will go to zero. It's like you discover the internet.
No, great. I don't have to acknowledge that.
Do you go Google or AltaVista? And so if you invest in AltaVista, you end up with zero. If you invest in Google, you're a gazillionaire.
No, it's not Google or AltaVista. It's Vodafone or AT&T.
There's like 5,000 coins out there. They're not all going up. A lot of them are going to zero.
Agreed. But let me stop you there, right? So there's two choices. You can go with the brand new app and, like you said, swing for the fences, right? And that's going to go to zero, or it's going to make you 1,000x. You're going to kill it. Let's ignore that for a second, right? That's gambling, basically. We don't want to gamble, we want to invest. So I'm talking about investing in, like, take my money, I'll put a little bit in that just for fun, really. Like, it is gambling. Yep, I'm going to have a gamble, but just a very small slice of my portfolio. But what I'm talking about is taking a big chunk out of Bitcoin and just distributing it amongst Binance Smart Chain, Cardano, Polkadot, and Ethereum, for example. Just those four. Because if someone's going to flip Bitcoin and be that big exponential, there's a 90% chance it's going to be one of those four. But it's going to be years and years and years till we know which one. So in the meantime, if people start thinking like this and going, hey, DeFi is the next crypto, let's get into the one that's most successful, everyone's going to get into those four. And so they're all going to go until, eventually there'll be a winner. But in the meantime, they're all going to go exponential. Does that make sense?
I understand what you're saying. I just don't think it's true. And the reason I don't think it's true is because I have lived the quandary that you are currently experiencing. I lived it, dealt with it, and had to decide what to do with it 4 years ago. 2017 comes along. Bitcoin's got governance issues. Bitcoin Cash is hard forking. There's a different Bitcoin fork every other day, and altcoins are going ballistic. They can do all these cool things. Literally every single thing you're saying today. The future is bright for altcoins. Bitcoin's flailing. It's got the fees are ruining it. All these other things have cheap fees. Bitcoin dominance is down at 35%. Oh my God, everyone else is seeing it. It's going to go to zero. What's going to happen? And there's, if I can remember, there's EOS, there's Ethereum. I don't know. There's some others that probably don't even exist right now. Like, I think over this 4 years, because I literally had this conversation with you every step of the way 4 years ago, not with you personally, with myself 4 years ago and others. And 4 years later, I think, I mean, there's some that have outperformed Bitcoin, but not many and not much. So it just, I mean, I've just been here. So what I've kind of come to realize after that 4-year experience is I've come to see that, kind of going back to the argument earlier, Bitcoin is a different animal. It solves a different problem. These experimenting things are interesting and fun. But I think with technologies like ThorChain and whatever else, all that interesting and fun out there is going to come back to the Bitcoin world. And the reasons to leave Bitcoin will not be there. And it's safety, security, and longevity. So I don't know, I say that word because Martin Luther King says it that way. Longevity is better. It's more proven, more better branding, etc. And so I'm just hesitant to do it.
But 4 years is a kind of cherry-picked time, right? Because I just pulled up a graph. If you'd have got into Ethereum 5 years ago, you'd be better off now.
Right. Yeah. Fair.
So you can't just go, I looked at it 4 years ago. And had you have got, in fact, there's only a very short amount of time that you could have got into Ethereum and been worse off. So like, had you have got into Ethereum anytime from September 2018, August 2018, where
yeah, that's to today. But
from July 2018 to today, you'd have been better off. But at any time before,
stop. I'll interrupt you. You're choosing a whole bunch of varied times to start with, but you're all ending today. And today is probably the end of altcoin season, like where Bitcoin dominance is down to 30%. If you choose it a whole bunch of times and compare it to 2 months ago, then there's almost no time when Ethereum outperforms Bitcoin.
All right, I'll challenge you. Give me 2 dates. The trend is up. Like, okay, so if we went from, let's talk about 2 months ago.
So this isn't fun. This isn't for fun for people watching because neither of them seeing charts. So having a chart fest isn't that fun.
All right, but I've got the graph in front of me. The general trend is up. It is going up. So I'm just challenging what you said is like, your point was, yeah, I went through it before and I chose this direction. You chose wrongly. It's as simple as that. Like historically, you'd have made more money going the other way.
No. All right. So I am looking at the chart. I'm looking at 2016 to 2021, and I'm looking at Ethereum as and Bitcoin pair, the Ethereum Bitcoin pair. So there's just everything's revealed.
Yeah, that's what I'm looking at.
Okay, it goes back to 2016.
I'm on the 5-year chart. Yeah, so I'm on 2006. Oh, I'm 13th of June 2016. But yeah, sure.
All right. Well, I don't know what you're talking about. The trend is up. That's not what I see.
So it shot up and then it came down and then it went up and then it came down.
Hang on, let me share the screen so people at home can see it.
Sure, let's do that.
Smack. So, all right, you seeing what I'm seeing? So here's the 5-year chart, Bitcoin. I mean, the recent trend is up, but I mean, you got peaks up here, peaks up here. I mean, I'm looking at.
All right, you draw me
this trend, and I'm looking at this trend here. I don't know, looks steeper down than up. And it looks like it spent more time at the bottom than at the top. Looks like every now and again it shoots up and has a peak and crashes back down pretty fast and spends most of its time down here. So anyway, I don't think it's a conclusive argument. And I don't think it's
all right. Sure.
Crypto has a 4-year cycle. We're looking at 5 years of history.
Here's a question for you. Do you know when DeFi, like when smart contracts came? I assume Ethereum would have been the first ones. Hang on, let's just Google that for a second. And I'd be interested to see that graph from then.
I'm gonna stop sharing because I think we'll move on. See, this is what happens when old friends talk, guys. It's like carry on like old women. All right.
So anyway, I sum up for me. I won't look up that. So sum up for me. Let's go on one at a time. Why does Bitcoin have any value? Why is in comparison to Cardano, Ethereum, whatever? Give me one, and I'll see if I will give you that one.
Longevity. It takes a long time to build trust. Money is about trust, and Bitcoin has much better branding.
Branding, 100%. I give you branding, and that's the only reason I want to leave anything in Bitcoin. So yes, branding I'll give you. Longevity, how much longer has it been around than Ethereum?
I think
that's a percentage.
Like double.
Is it?
I think.
So I guess I'm a long-term investor. I'm not a trader.
Mm-hmm.
So the more time that goes past, the more longevity Ethereum has. So that's not a reason to not be in Ethereum.
Yeah,
if I get in it now, it'll grow more longevity, and therefore the price will go up, and I'm in it for the price to go up. So it's not an investing reason to stay in Bitcoin rather than Ethereum.
So I'll give you that, because I've used the same argument as people like Bitcoin versus gold bugs. It's like gold's been around for 5,000 years. It's like that has value. Don't want to say it doesn't, but doesn't mean Bitcoin's not going to beat it. So yes, I agree. Longevity is an argument, but it's a limited argument.
Cool. So give me another one.
So maybe I'll frame the conversation this way. And I don't want to repeat this myself because I went through like 5 different vectors before. And like there's no one else who solved like all the problems who can beat that. You said like Ethereum is the big dog and everyone's talking about Ethereum, but then you said, well, actually, like when I went through that store of value issue, you said, well, actually, you're right, Ethereum hasn't solved that problem, but Cardano solved several of them or whatever. So let's make a different tack. Let's paint 2 different worlds. Do you think so? You'll accept now that Bitcoin has the market cap, Bitcoin has the branding, Bitcoin has longevity, Bitcoin has a few things going for it. Will you, at the same time, I'll accept that altcoins have some super fun things going with it, smart contracts, Bitcoin doesn't.
I think you're underplaying them when you say super fun. I think they're world changing.
Okay, that's fine. World changing, cool stuff. Okay. And you can apply what weight to those vectors you wish. And by the way, I do put a very high weight to it. So now the question becomes, I feel like there's a time, there could be a time, there's like a ticking time bomb. If the layer 2 solutions of Bitcoin and layer 3 solutions and all the other things that can be built on, because there's 2 models of the world. I kind of articulated them before. There's this super whiz-bang chain like Cardano that does everything, or Ethereum does everything and has a whole thing. And then you've got this other model of the world where there's this very simple layer 1 money, Bitcoin, and it kind of it's a little protected species, and we cuddle it, and we don't experiment with 2 of it too much. And then we experiment with layer 2 and build on top of that and experiment with layer 3. And then eventually layer 2 is more solid. So 2 different worlds where there's where Bitcoin is the center of the universe, and then you can still do all the things. You can see all the DeFi, all the smart contract, all the indexes, all the exciting things you can do elsewhere. You can still do in the Bitcoin world eventually. It's just going at a different speed and a different direction, and has different ebbs and flows between what's exciting and what's not. And there's 2 potential futures: a Bitcoin-centric world with layer 2, layer 3 on top of it, and a whiz-bang all-in-one world where it's constantly changing. But if they make a mistake and like the network freezes and fucks up, it loses an incredible amount of trust and branding, and no one can take it seriously for another 5 years, right? And those mistakes are going to happen. Like I even think they're going to happen in Bitcoin. They're just going to happen more frequently in things that are changing a lot faster. And so you've got these 2 different worlds. And so arguably, I will say that if layer 2, experimentation and things don't come online in some amount of time, Bitcoin's going to lose out to the other things that are more exciting and developing rapidly. But if these things come along at a reasonable rate, and the excitement and all the things can stay in this world, then its advantage in branding and longevity and etc. will actually it'll eventually win out. Does that sound good to you? Does that sound fair to you?
We're getting closer to agreement here, right? So yeah, I mean, look, if you could have layer 2 apps on top of Bitcoin, there's no more conversation. Like, I would be very, very bullish on Bitcoin. But right now, I believe, and please correct me if I'm wrong, I believe you can't have layer 2 apps on top of Bitcoin right now, right?
So no, we've got Lightning Chain, which is crushing, which basically makes unlimited transactions. Like the throughput's incredible. The fees are zero. So fees are going back to zero.
Hang on, I might be misunderstanding what layer 2 means. So I guess the thing that I want to invest in, right? The thing that I believe in strongly is DeFi. I think that's the new cryptocurrency. That's what cryptocurrency is to fiat, DeFi is to cryptocurrency. It's the new thing that I want to be invested in DeFi because I believe it's going to grow exponentially.
Mm-hmm.
You can't do DeFi on Bitcoin. Yeah, we agree on that.
No, well, I know. You've seen the Thought Chain series. We absolutely can.
Sort of. You can be a customer and you can swap your Bitcoin for something else. But on the other side, so if you want to lend stuff, you have to lend Rune. Like, you have to be exposed to half of your money has to be exposed to Rune. So it's not ideal in that way, right?
Okay, maybe you say not ideal, but you can also say that's not where this ends. That's where current technology sits. And if you want zero exposure, you can do something else, which is wrapped Bitcoin on any one of the other networks. You can do other stuff to like buy time. And so we don't know what technology is around the corner or what's going to be invented in the next 12 months, 18 months, 2 years, 3 years, 4 years, 5 years.
But here's what we do know.
Go for it.
We can rewind 2 years, and then we know what technologies are going to be invented in the next 2 years because they've already been invented, right? So you're saying stay here because maybe it'll get good. So for example, to me, what your argument is like saying, yeah, sure, Mazda has flying cars, but Toyota might come up with a way to just teleport. So let's invest in Toyota because they might be able to teleport, but they can't. Who cares? Why would you invest in something? Because they may come up with something in the future.
Because what you're doing is you're applying an enormous, you're like shrinking the weight of the vectors that I've put forward for Bitcoin. So I went through like 5 earlier, and that was just 5 off the top of my head, like proof of work.
Which I have, yeah, I don't have any, I don't think proof of work is a good thing.
Yeah, so you haven't applied any weight to that. You haven't applied, and I went through, and you didn't apply any weight to them, and that's fine.
There's one thing I apply weight to is brand, right? But the others I don't see any advantage of.
Like, yeah, so therefore, so that you're having the conversation as if you haven't, which is fine. Like, you can apply weight to those vectors as you choose, but then you should invest in the thing. Like, so we're weighing up all these vectors, and so you're saying, I mean, this vector over here is just way more valuable to you. You're putting a lot more weight in it than all these vectors. And so you've dismissed them all, which is fine. That's your prerogative. I'm suggesting you're missing something there. I think you want to revisit and take a look at how much weight you apply to those vectors.
So remind me the vectors. Brand.
I think to be attacked is Bitcoin. It's much harder in Bitcoin. It's got the hashing power. And I think proof of work is better for that. It's more, and for that reason, it's more decentralized. You've argued that Cardano is more decentralized. But okay, I don't know what.
So can we just talk about that for a second? I read something the other day that 51% or whatever of the hashing power of Bitcoin comes from 10 different farms. Do you know about
that? No, I don't. I don't know. Are you sure I'm not mining pools instead of farms?
But potentially, I could be mistaken, but even if it is, that just means if 10 people get together, they can hack the Bitcoin network, right?
No, but what they would do is that what they hack the Bitcoin network, but then they've destroyed everything they've just stolen. Like there's nothing to get in there from it.
Unless they hack it and they just steal $1 million here, steal $1 million there, steal $1 million until the thing collapses.
No, because it's visible. What they're not stealing. They're doing what's called double spend attacks. That's what you can do with a 51% attack. And you do double spends, and that's visible on the blockchain. You spend a coin on that chain, you spend a coin on this chain, and then you're distributing the hashing power.
But hang on, you're just arguing against your own argument, because you were saying the whole advantage of Bitcoin is it's decentralized. So when I say it's centralized, you're like, that's okay if it's centralized, it doesn't matter. So does it matter or does it not?
So, well, here's the thing. So the game theory of the Bitcoin mining system has been playing out for 11 years. And so that's 11 years of faith in that economic model working. And so prime example, Ethereum is about to switch to something, and we got to restart the clock on whether or not we can trust that this system works and there's not a bug in it and the economics don't align and whatever. So it's an exactly perfect example about what the consequences of doing the mechanics while the jumbo jet is flying and not waiting to service the jumbo jet when it's on the ground. So that comes at a huge amount of risk with what they're doing, changing the entire economic model.
Hey, here's a question for you. And I don't know if this is something you're comfortable sharing.
Probably don't ask it then.
All right. Well, I know you don't want to recommend it. Okay. I'm asking you for advice. What split, not in dollar terms, but in percentages. All right. First of all, I'll go to a different tact. So if we categorize cryptos into store of value, ecosystem, so they're your Cardanos, your Ethereums, etc. Oracle, privacy coin, which I'm not a fan of. I just watched your privacy coin video, by the way. Loved it. Thought you articulated it fantastically. I won't invest in any privacy coin. Just as an investor, I'm not from a philosophical point of view. I think they're fantastic, but as an investor, I just don't think they have a lot of value. And there's another category which is non-financial related. So I know there's like VET, for example, is doing, I don't know a lot about it, something to do with logistics. And then you got Theta, however you say it, is doing streaming video stuff with blockchain technology, which is really cool. So we'll call that miscellaneous, right? So out of these categories, how would you suggest if set up, what percentage would you put in store of value? What percentage would you put in ecosystem or apps? So store of value, ecosystem, apps, Oracle, miscellaneous. 5 categories. How would you break it up?
Okay. And the time horizon is 5 years, 10 years, 15 years. What do we pick a time horizon?
A few years, 3 years.
3 years, not even one cycle. Can we get a whole cycle in there?
Sure. So like put it this way, for me personally, I don't want to be in there trading every day. I've got no interest in that. I want to buy and hold, but every now and then I might go, you know what, I've changed my mind about that one. I want to get out of that. I'll put it in here instead. So I might change every now and then, but I'm an investor. So with that in mind, but I'm not going to hold it for 20 years, you know?
Okay. Gotcha. Okay. So
right now, where would you break it up?
So first of all, okay, so I will give you an answer to the question, but first of all, I will give, I'll walk you through the reasoning. So I think it helps sense. It makes sense. So I think the most important thing in the world of crypto is to be a strong hand. I think that's a very, very important thing, because shit happens all the times. 55% drops, massive altcoin season, massive Bitcoin season, huge swings, And your nerves,
you know, I've been through multiple 50%. I've been through 80% drops.
Right. And so we've seen it all. And I know your psychology is very, very strong on this. You take your losses well.
We've both lost a lot of money. Multiple hundreds of thousands.
Yes. So that's okay. So I think the most important thing for the average person, so this is actually an average person, because this is on YouTube. It's like I get this question all the time. And so one of the most important things I think is to have strong hands, because if you are weak, you will get shaken out of your position. Like I think just happened to a lot of Bitcoiners just in this last pullback. So a lot of people scared, a lot of people not coming back in, and getting shaken out of your position is one of the scariest things. Within the context of that, this Bitcoin dominance flying down, flying up, 2 months ago, Bitcoin dominance was at 70%. Now it's at 30%. Like, that terrifies people. I think it's going to yin and yang and just go up and down for many, many years. Some people think Bitcoin dominance is going to zero. It's just going to be, so I think you're like leaning towards that. It's like a serious consideration, right? So part of the portfolio strategy, would be to steal, STEEL, steal people's nerve through those cycles so that people are not getting scared, right? It's one of my primary considerations when advising portfolios, because otherwise nervous people are always going to sell at the exact wrong time and buy at the exact wrong time. They just do it. I've been nervous. I always did it that way. It's just the nature of the beast. So with that in mind and that risk management perspective, I would think something in the order of a 60% weighting to Bitcoin. It's going to be the least volatile of them all. I think its rewards are going to be outstanding, especially right now with Bitcoin dominance down at 30%. I think we're 40%. I think that'll head back up soon, maybe go down a little bit more, maybe go up. But anyway, Bitcoin about a 60% weighting. Then with the remaining 40%, would probably go something to the tune of an Ethereum 15%. What are we at? 75? We might need to bump those numbers up a little bit. I would probably do something in the order of 5 Cardano, 5 BNB, 5 DOT, something like that. If there's another one out there in that category, maybe throw in another 5. I'd throw in, I'd maybe even treat Chainlink when it comes to oracles, all I would do is Chainlink, something in the order of 4 or 5%. I've lost count to where we're up to. And I'd probably throw another, I'm particularly bullish on ThorChain at the moment. I'd probably throw a little bit extra in on that, like a 3-4%, but that's in the category of, it's a layer down. And that's in the category of sprinkling things around on some of the really exciting projects that I come across that I want to swing for the fences with. Something like that.
We're not that far off, honestly. I'm probably a little lighter on Bitcoin at the moment, but I think I know why. So let me ask you, because I think you gave the answer to your audience and not to me.
Yeah.
And so with me, I'm aggressive as far as investing, A, and B, like I'm never going to panic and go and pull out, right? Like I'll go, okay, I'll put it in Cardano. Cardano just halved. That's all right. It's part of the plan. It'll triple next month. Like, so
she'll be right. You're an Aussie investor. She'll be right.
And that has at times worked out really, really well for me, and at times it's bitten me in the ass. But I think if you compare me to a traditional investor, I've done a lot better than them, right? Like, despite the fact that I've lost hundreds of thousands of dollars in a single day, I've still made, I think I originally put in, I don't know, $30,000, and
I highly recommend people do not talk about their crypto holdings.
Sure, I got a lot more than that. So with that in mind, would that change your answer if you were?
Just knowing you're a little more aggressive. Yeah, as I said, I think the Bitcoin is the best risk reward bet out there, I think. But if you want to go higher up the risk curve, then sure. So you step out deeper and deeper into the wilderness. So the first step out into the wilderness is Ethereum. It's not that big a step out into the wilderness. 20% dominance. There's an incredible amount of intellectual brain power. I think in the order of millions of coders working on the Ethereum network, building dApps on Ethereum, fun stuff. Yeah, but that's a step out into the wilderness. And you're just talking about, should I step further out into the wilderness? Well, you're as an aggressive person, you step further and further out into the wilderness. You start looking down at, coin market cap, 10, 20, 30, 50, 100, 200, 500 position. And yeah, you can do that for sure.
So here's a question. You're not 100% in Bitcoin, right?
No.
Will you share your percentage portfolio, or is that something you'd rather not?
Well, it's very, very high Bitcoin percentage. but so much of it is not necessarily where I would like to be. So much of it is, for me, like in my trading account, I keep it how I want it. But in my long-term holding, for me to sell some Bitcoin to switch into, say, Ethereum or Cardano or whatever, the capital, I just to give money to the government, I just can't cope. So I just don't want to take the capital gains hit on
it. If you just swap it though, does that
in both in Australia and pretty much every country in the world, with the exception of El Salvador as of today, yeah, you can there is a capital gain, that is a capital gains tax event every time you swap. Oh, I didn't know that one.
Thieves, eh?
So anyway, capital gains in Australia is vicious, but that's long-term capital gains. Go for
it. You don't want to be so heavily in Bitcoin. You want to have, diversified. You want to be out of Bitcoin. My question is, why do you want to be out of Bitcoin? Is it because, there's two reasons. One, because you want to speculate a bit more and you might be able to make more money, or is it because I want to be safe unless I'm wrong and Bitcoin, like
it's the latter.
So it's a risk aversion thing as opposed to because it's the same with me. We talk about me being aggressive getting out of Bitcoin. I don't view it that way. I'm not getting out of Bitcoin because I want to trade more aggressively and make more money. I'm getting out of Bitcoin actually from a conservative mind point because I don't want to lose opportunity, I suppose you'd say.
Well, you don't want to be right about crypto and wrong about Bitcoin.
Yeah.
So that is the reason I would like to lean more diversified than what I am. But I mean, I'm well over 90% Bitcoin. And I would like to be a little more balanced. That's all.
I actually feel strongly Bitcoin won't win eventually. I'm pretty confident on that. I guess my only question is, like, am I thinking too long term? Will it take 20 years for someone to flip Bitcoin? In which case, I want to still be in Bitcoin. Like, I think eventually someone will. I think Bitcoin is. I can't even remember its name now, which kind of drives my point home. What was the old Facebook?
Nokia. Oh, what was it?
Yeah, exactly. Them. MySpace. Yeah. My concern is that Bitcoin is MySpace, right?
Sure.
First in, revolutionary at its time. It was a whole new technology and someone just did it better and took over. And I think it could be, I'm not convinced that's Ethereum. It could easily be Ethereum, Cardano, Polkadot. The Binance Smart Chain, I'm a bit unsure about because it's centralized, right? Do you know much about that?
Which one? What?
The Binance.
I don't know. Well, I know it's CZ, the CEO of Binance, the exchange. I mean, it's his coin. He created it, and if you I'm sure he's a huge stakeholder. I don't know if he's like more or less as a percentage than Vitalik is of Ethereum. I don't know.
Yeah, I don't know, but yeah, it's interesting.
So you know what? I think we should wind it up. And yeah, I don't know. You guys, let me know in the comments below. Did you enjoy this kind of banter between me and a buddy of mine, or do we sound like a bunch of idiots? Let me know if you enjoyed it. Hit the like button, hit the subscribe button, and I think I'll be doing a lot more interviews in the next few weeks. So let me know if you like this format, and I will see you guys soon. Take care. Bye.